You're ready to buy a house, and your credit app says your score is looking great. But when you finally apply for that mortgage, you might find the door locked tight. That number on your phone is likely an illusion. Those free credit monitoring apps are designed to give you a general pulse on your finances, but mortgage lenders don't use them. They use specialized, unforgiving FICO models built to evaluate a single thing: the risk of lending you hundreds of thousands of dollars. This chart shows exactly how much the model and the timing matter. Here are 3 identical financial profiles. The first bar is the generous 740 score shown on a consumer app. The middle bar is what happens when a lender pulls a mortgage FICO score with bad timing. It drops to 680. But the third bar shows that same mortgage FICO score rising to 730, simply by optimizing when the credit was pulled. That 50-point swing matters, because in the mortgage world, a difference of just 20 points dictates your interest rate. That tiny margin dictates whether you pay or save tens of thousands of dollars over a 30-year loan. Most buyers assume the answer is generic credit repair. They start paying off old debts, closing old unused accounts, and disputing everything they can find to clean up their history. Successful mortgage preparation relies on meticulously managing current risk signals to give the underwriter a clear, low-risk path to approval. Many well-intentioned financial moves made right before closing will actually backfire. Lenders look for stability, and sudden shifts in your credit profile often trigger unintended risk flags. To navigate this, we need to look at credit prep through a return on investment framework. We are going to evaluate every action based strictly on the effort required versus the actual FICO score impact. We will map out the specific, high-yield moves that can secure you a better rate and identify the dangerous traps that often lead to immediate loan denials. Securing your home requires trading the intuitive desire to fix everything right now for the discipline of strategic restraint. This is a 4-quadrant matrix mapping out the efficiency of different credit strategies. The horizontal axis measures the cost and time required, while the vertical axis shows the actual impact on your mortgage approval. The highest return move sits right here in the top left quadrant, low effort but massive impact. It is called the AZEO strategy, all 0 except 1. AZEO works by moving your payment window. You pay revolving credit cards down before the statement closing date, rather than waiting for the due date, because the statement balance is the number that actually gets reported to the bureaus. The goal is to force all your credit cards to report a 0 balance, except for a single card. On that one card, you leave a micro balance between 1 and 9% of its total limit. Because the mortgage FICO models heavily weight your active utilization, this specific action yields rapid, noticeable point increases, usually within a 15 to 45-day reporting cycle. The trade-off is that it requires discipline. You have to track your statement dates carefully and maintain enough cash flow to prepay those monthly expenses before the bank even asks for them. Managing the exact dates your balances report to the bureaus proves far more impactful to an underwriter than your overall history of carrying debt. This timeline graphic illustrates a dangerous, high-risk gamble, randomly paying off old collections. You might think paying a 4-year-old debt looks good, but when you make that payment, the red marker jumps to the current date, updating the account's date of last activity. This triggers a hidden algorithm trap. Older FICO models used by mortgage lenders see that new date and treat the 4-year-old bad debt as brand new, which can actually drop your score right before underwriting. Then there's the low return trap, found in the top right quadrant, using internet templates to mass dispute accurate late payments. Underwriters despise open disputes on a credit report. If they see you contesting valid debts, they will routinely pause or outright reject your application until those fake disputes are resolved and closed. There is a strict boundary here. Legitimate disputes require provable, factual errors, like a duplicate account or identity fraud, to be effective. Spending your cash to clear old, inactive debts or filing aggressive, inaccurate disputes wastes valuable time. Without direct lender guidance, these actions actively delay your mortgage approval. Let's look at the absolute negative return trap, the cleanup myth. This visual equation shows what happens when you close an old, unused credit card. The total available credit bar dramatically shrinks, causing your utilization percentage to instantly spike into the red zone. By trying to look responsible to a bank, you inflict twofold damage. Closing the card destroys the length of your active credit history while simultaneously creating a severe utilization penalty. You see a parallel mistake when buyers finance new furniture or appliances just because their closing date is getting close. Every new inquiry and newly opened debt creates an immediate risk alert within the automated underwriting system, signaling that you might be taking on more than you can handle. Acting on the emotional desire to make your finances look tidy right before closing is the fastest way to lose the house completely. To successfully execute this, you must split your strategy based on exactly how far away you are from purchasing. If you are the time-poor buyer, meaning you are 30 to 60 days from underwriting, your options are highly restricted. Firmly, your sole mandate is to strictly follow the Do Not Touch list. Ignore old negative marks, do not open or close accounts. Just hyper-manage your active revolving utilization to keep it below 10%. If you are the planner, sitting 90 or more days out from your mortgage application, you have more room to maneuver. The planner's expanded toolkit includes executing the precise A0 card strategy, mailing targeted goodwill letters to creditors to forgive isolated late payments, and submitting certified documentation to correct actual factual errors on your report. The rule of thumb is simple. The closer you get to the closing table, the less you are allowed to manipulate your financial profile. Which brings us to the final, ultimate, non-negotiable rule of mortgage prep. Never, ever play the credit game alone. Do not pay off a collection, do not close an old credit card, and do not move large sums of cash around without asking a professional first. Contact your real estate agent and preferred lender immediately. Let the professionals pull your true mortgage FICO score so they can dictate exactly which levers to pull to get your loan approved.
Sunrise over Houston, the city starts to wake. Another day for dreamers, for the chances they can take. Looking for that perfect porch, that patch of Texas ground where the roots run deep and the best life can be found. But the market's moving fast and the choices can be wide. You need a steady hand, a trusted friend right by your side. Call up Smith Family, Realty, Texas. They know the lay of the land. From the Heights to Katy, they got the master plan. They don't just sell your houses, they help you find your start, turning houses into homes with a real Smith family heart. Maybe it's a ranch house or a rise you downtown. They listen to your story, they won't let your hopes fall down. They treat you like kinfolk with honesty and grace, putting smiles on faces all across this Lone Star State. They've been doing this for years, their reputation stands tall and true. When you're ready for the next chapter, they're the ones to see you through. Call them Smith Family to Texas, they know the lay of the land. From the Heights to Katy, they got the master plan. They don't just sell your houses, they help you find your start, turning houses into homes with a real Smith family heart. They understand the meaning of a welcome home and God bless. They handle all the details so you worry less and less. Call up Smith Family Realty, Texas. They know the lay of the land. From the Heights to Katy, they got the master plan. They don't just sell your houses, they help you find your start, turning houses into homes with a real Smith family heart. Yeah, Smith Family Realty, Texas. your